All right, so let's jump into it. So again, the purpose today is to really go over the differences between a 1-1-2 trade and a 1-1-2-2 trade, which is going to give you a little bit lower or require a little bit lower buying power for your trade, which in a small account can make a bigger difference for you. And it might, in some cases, make sense. In an IRA, I don't find it quite as useful, but we're going to do a demonstration of each. We'll try to keep this to an hour today just to go through this. But I'm going to start with MES and compare what you would be doing if you had, let's say, multiple MES contracts and you wanted to switch to ES instead, and how would that look? So let's start with a basic. Oh, there's that gold strangle finally. So finally, gold strangle closed today. So we got another winning trade today on gold. So perfect. And so we opened that live cattle strangle, and we closed the gold strangle, which I was expecting to happen at some point. So fantastic. All right, so let's put on a 1-1-2 trade. We're going to go out to 120 days. And again, a lot of questions come up as to, hey, are you using the AM or the PM expiration? It's 120 days out. I really don't care. You can use whichever one you want. I mean, you can go to 93 days. You can go to 121, 120. At 120 days out or 4 months out, an AM or PM expiration is going to make a whole lot of difference to me at this point in time. So I don't care which one you particularly choose to use. And I will rotate between the two indiscriminately. It doesn't really matter. But in this case, we'll use the PM expiration for MES. And we're going to look at going with, again, our standard, 24 delta, 50 wide. I like to stick under $8. Okay, so some of you guys will question, like, okay, why'd you do it at 24 delta versus 25? Sometimes it's just your platform, and my platform may have different deltas. If something's coming up at 26 and the next lowest one is 24, then I will, I'll go down, to the 24 or something, mainly because I like to make sure that I don't spend more than $8. It's just kind of my pet thing. But I don't like to spend $8, which is why I wouldn't go up here and spend $8.50, which is anyway that's over the 24 delta strike here. So anyway, long is 24 delta, 50 wide, going down to about 5 delta on this would give me about the 3,800. I would be doing 2 of those, and let's take a look at how this looks on this particular trade. So let's look at the Analyze tab. Not sure why I did that, but okay. All right, so here we go. And taking a look at this as well. And still people coming in late, but all right. All right, so here's what that 1-1-2 trade would typically look like. Now, I'm going to base it on let's say a $15,000 account, and then maybe we'll look at let's take a look at it like a $30,000 account, for example. So if you had a $30,000 account and you were having to, and you were going to trade here, okay, the first thing I'm going to do is the 1-1-2 trades are pretty much my core strategy. Oh, and by the way, for those that are on here, and there's quite a few people on here today, we got 91 people, which is awesome. If you're new here, I have stopped the weekly strangle. I know I get that question every week for new members. I have not updated the trade plan. There's been some discussions in a lot of the different areas on it. I just have not updated the trade plan because I have a massive reworking of that for 2024 with a lot more detail in it. So I haven't put one out, but I'm not doing the weekly strangles. I am still doing strangles. I'll cover that more later. But essentially what I'm doing is, instead of forcing myself to have 4 strangles on gold, 4 on ES, and and having to do those at smaller size because I have to cram 8 strangles plus any other strangles I'm doing on, and they're smaller size. I got rid of the weekly moniker on it, and I'm just adding them when I can. Right now, I've got, if we look at the portfolio, there are, on the strangle side, There's 2 strangles on ES. There were 2 strangles on gold. One just closed a few minutes ago. And as one comes off, I put one on. There are also a strangle here up on CL, which is up on oil, which is up 20%. I think that's the only, and there's another strangle on oil, which is down just 13%. So there's 2 strangles on oil, 2 strangles on ES, 2 strangles on gold, and now there's also a strangle on live cattle that we just put on a little, 20 minutes ago, 30 minutes ago. Right? And the reason I'm not doing the weekly is the weekly forced me to do smaller size as opposed to maxing out my gains. I wanted to make sure that if I'm going to win, that I win a full size trade as opposed to winning half size or smaller size trades because I got to put 4 on. When I lost, I was losing, a smaller amount than the max. But because there's such a good trade and I have a 90% win rate, I wanted to maximize the size so that my P&L is maximizing my gains. If I keep winning 90%, but my size is small because I'm trying to get 1 on every week, sometimes you're taking those trades off early, so you're not getting the full 50% winner. Sometimes you're taking those trades off at 60%, but sometimes it's at 30%. And today, somebody asked, I think, what would you do if all 4 of your trades were negative? Well, I would be taking off the least loser of those trades. Well, instead of taking off trades at less than 50%, but yet I'm still taking the full loss at 2x, it didn't make as much sense to me to continue that strategy when I could bulk up the size of each individual strangle so that I can maximize the gains and always be closing at 50% winner and a 2x loss on full-size trades as opposed to something small. Anyway, I hope that makes sense for you, but that's why I'm not doing the weekly strangles anymore. Let's get back into this particular trade. And we'll go through that more at another time. But anyway, I wanted to make sure that that makes sense for everybody here as to why strangles are the way they are. There's some people in the waiting room again. Hopefully everybody's here for the right thing. If you are here for the Mr. Top Tick Income Navigator trade review, you're in the right spot. If you're here for anything else, you're in the wrong spot right now. All right, so let's jump into this. So let's say a $30,000 account. In a $30,000 account, you're going to allocate $15,000 in buying power, right? 50% is my target max buying power on most of the time that I would like to have. Well, if I have a $15,000 max buying power, and I'm going to do the long-term 1-1-2 strategy, which is basically putting out 1 on every 2 weeks for 4 months, 120 days, that means I'm going to have 8 trades. Well, if I have 15K, okay, and I'm going to put on 8 different trades, okay, I'm only going to be able to use maybe $2,000 per trade in buying power. Okay, so when I get to $2,000 in buying power, what does that, what does that look like here? And if we were doing, let's say, this is actually, we'd have to only be able to do 3 contracts. Okay, gets us to 1767 in buying power. So 3 contracts takes us to that 1700, almost 1800 in buying power. Okay, so that's the most you could do. And if you guys do type in the chat, I will do my best. I'm here trying to run it all. So if I don't get to everything, I'll do my best. But $15,000 in buying power. I've got only 3 contracts that I can put on at any given time. Okay, 1767 would be the most that I can do from a buying power standpoint. If I went to 4 contracts, it would take me to 2,400. That's too much. Okay, so I can only do 3 contracts. I do it. I want to make sure, we're using the right account. So I can only do 3 contracts of MES. Makes sense? Hopefully, yes, yes, and yes. You do not have to answer that question. It is rhetorical. All right, so this is one way to do it. Now, let's take a look at this particular trade. And I'm going to screenshot it so that I can set it off to the side and remember exactly how this trade was set up. Okay, so this particular trade right now gives me, and I'm going to move this around on my screen here, so bear with me for a second. This particular trade gives me 248 bucks in the tail. Okay, everything above the long put here is the tail. So the small skinny, that's the tail. 248 bucks. I make 248 bucks. I'm using 1764 in margin. That's 14% return or so on this particular trade. Right. So that's what this trade is looking like here. And then anything in the trap here. And now our trap is 998. And I'm going to, maybe even write those numbers down briefly if you're here. But remember, 248 in the tail, okay, 998 in the trap, using 1764 in BP. All right. That's what a typical 112 trade is going to look like for you, or a long-term 112 trade is going to look like for you in the smaller account. You put 8 of these on. It maxes out your buying power. That's it. You sit there, and every 2 weeks, you take something off unless you start to close naked puts early, which we're not going to get into in this particular session, or if I'm closing PDSs early. If none of that, if none of that happened, and I just let these things go to expiration, okay, that's what I'm going to make. It's probably a little light on return. I'd probably pull this put up fractionally higher to maybe 38.50 or so, because 304 on 2070 here, still about 15%, still just okay. All right, so 15%, and that 15% in 4 months is, it's over 3% a month, so it's still not bad. All right, so this is our trade on MES. Now, what would we do if we wanted to jump into ES? Instead, could we do this using a little bit of a different setup? All right, so we're going to go to ES, just a quicker way for me to get there. We're going to go to ES now, and these are all of our ES trades on. And if you want to ever look, this is just for this particular contract, but here's where we are now at 4,500. If we drop 10% to 4,000, okay, we have a $63,000 potential profit in this big fat area here. So it's pretty nice looking overall pump. If we go down, we really make some nice money. So if we go down 10%, we make 63 grand, and then we go to the Bahamas or Hawaii or something. Here we buy Kevin some Grey Goose, we go party, life is good. All right, so there's that's what ES looks like. But let's say we want to put on a 112 using ES instead in a small account. So I'm still going to go find my 24-ish, 25-ish long delta, go 50 wide, go down to about the 5 or so here, and I'm going to now put on this particular trade, Kevin. All right, so let's take a look at this particular one here. Here's what it looks like. So here's the trade using ES. Okay, well, if you remember the trade we just put on using about 1,800 in buying power, okay, if I'm doing it with 3 contracts, okay, $30,000 account, $15,000 in max buying power usage, which means I can only go up to about $2,000, not even, per trade to get 8 of these on, okay, I can't do it using ES, okay, $5,000 in buying power is too much money, and that's not gonna fly. So what can we do though, instead of putting 3 contracts on? And you remember I had you write down some of those numbers that we had of 248 in the trap. Obviously this is 4 times larger, okay, in the trap. So instead of 248 making $1,000, we got to adjust this thing down. What can we do? One thing we can do is to look to put long puts on. Now, there's 2 things I'm going to explain to you today. Okay? There's 2 ways of doing some things. I just want you to think. I'm not going to tell you what to do, and I'm not going to make this mechanical. I want you thinking, what could I do to reduce buying power? The first thing I might do is put on, let's say, 1 put. What does this look like with 1 put down here? And I went about 300 points lower. I can let anybody else in. So I'm going to do 1 put. Now, what did 1 put do for me? 300 points down. Again, we can play with this number a bit. But what did that one particular, what did that one put do? So that put reduced my buying power to 3,200. Okay, it's better. Okay, now this is a $3,200 trade. Pretty decent looking trade. I mean, 650 in the tail on a $3,200 trade. That's 20%. Hopefully my voice holds up here. Right, not bad. So you could be doing this in your standard account as well. Okay, and you only are putting on one long put, not two, just one. Okay, and that alone reduces your buying power and still gives you one heck of a return. All right, so hopefully you're with me so far. All right, so that's one way to do this. Now, this doesn't get it down far enough to help me in a small account. So what I have to do is I'm at least going to have to put on two puts. So I'm going to change this quantity to two. So now I actually have a 1122 trade on. So a 112 trade on, 1122 trade in ES. Now, here's my buying power. My buying power is now 1460. Okay. However, so it's well within my buying power range now. Right. But and that Manuel, it's a good question. I'll see if I can get to that at some point here. On the T+0 line, what does that do for you? It's going to give you, it's certainly going to flatten it out a bit as well. All right, now I'm making only 193, but I'm using only 1460, which is not bad. It's 13% here. If you remember, we were making, I think, 15% on our MES with 3. Okay, so I'm close. I'm really doggone close. So now I'm a small account. I'm actually going to make 15%. Okay, so 185 divided by the 1460. Okay, it's 13% right now. 13% not quite enough for me. So what can I do to tweak this a bit? So one thing you can potentially do would be to move this naked put up just a fraction. Okay, let's see if that does it. So I moved it up just 50 points. Okay, because again, I think you have to play. You can't just play with only the long put. Okay, so now I'm making 350 using 1877. Okay, now I'm making 19%. This pretty much did it. Okay, so I had to make one adjustment here, but I put down this is about 300 points down. It's a good spot to start, I think. About 300 points down, I put on the 2 long puts, and then I did have to move up 50 points this particular put. There are other things I could have done instead to do it. I still need to get a little bit more cash. I could potentially move this down a little bit more here. So if I move this out just 50 points lower, okay, now I'm 270 okay, in the tail, and I'm spending 1690. So now I'm at 16%. Okay, this is a good deal as well, too. So this one works fine. I didn't have to move any of my strikes. Okay, same strikes as I had on the MES, really, the 4,300, 4,350. Now the 3,700 here, ES is a little bit better. You can get a little bit farther when you're using ES. On MES, I had to use a 3,800 put. Okay, on ES, you're actually able to get slightly farther out based upon the way ES trades. Okay, you would still have to do this in 2 trades. You still can't put this whole thing on here in. I still would have to leg in. So I still would have to put on this PDS as one trade, and then I would put on this as a spread as well, so a credit spread. So I have a put debit spread, and I have a put credit spread down here, 2 different trades. Okay, I'm always targeting around, for me, my goal is always 3% a month, right? And everybody knows 3% a month is what I want. The reason, though, that I went to long-term 112s is because I can exceed that. I can typically get about 5% a month on a long-term 112 trade when you go out to 120 days. So you get more bang for your buying power buck when you're doing the long-term 112 versus a standard 112 at 60 days. All right, so I'm always targeting about 20%. is normally what I'm looking for. So anyway, but I'm okay here. I mean, at 265 here using 1690, it's 16%. That's 4% a month. Certainly, yeah, Matt, you're getting ahead of me, man. So I'm hitting my numbers because if you remember, okay, my buying power previously was 1700. Now it's 1690. 1764 was using MES. Now, and I will screenshot this one as well. So I will give you guys these screenshots as well. Let me save this one quickly. So this was the MES 112 from this video. And then I'm going to also screenshot this trade, and I'll give you guys these in the Discord as well as the screenshots of the two different versions of the trade. Let me save it before I forget. This would be the ES 1122 from the video. All right. So what do we see? We're making 270 on 1690 versus 248 on 1764. So my tail profit is better than it was on MES. The tipping point for me is that you've got to probably get to the point where you have at least 3 MES trades or 3 contracts on MES. If you're using at least 3 contracts or more on MES, you can then, in my opinion, you could upgrade to ES using the 1122. That seems to be the cutoff for that because this is just 1 contract here, which would equal 3 of MES. Right now, what you do notice here though is now you look at the trap. Okay. Yes, there's a little bit less in commissions on ES versus MES because you're doing less contracts as well. So that's going to save you a couple bucks there. But look at the trap. If you remember, the trap on the MES 3 contract long-term 112 was 998. Look at the trap on this puppy. Okay, 2,750. Okay, this trap is not quite 3 times larger. When you go to the 1122, it makes it a little more difficult to get the tail profit without moving some stuff around. But your trap profit is at least double to 3 times larger in many cases. Okay, especially when you get farther out. A little difference when you're only doing like 60 DTE or something like that. We'll look at that. All right. Look at the trap on this thing. If you hit the trap here, you're going to make roughly $2,000 more in the trap than you would have made on a standard 112 using MES. Okay. Does this make sense? Yes, yes, and yes. Okay. So hopefully that makes sense for you. Let's see, Gary, you can always add more credit spreads and turn it into a 133. Yep. Yeah. 100%. You can do a lot of things on these things. You can certainly, bulk these up. If I wanted to do, an extra contract, if I did a 133 on this thing, okay, I'm, again, now your buying power is getting increased. So my buying power is now 2,700. I'm making 563. Using 2767, okay, I'm getting a full 20% in the tail, okay. I'm using more buying power though than I just was a moment ago, but my trap is much bigger. But I think when you keep it the same, I think I moved it. I don't remember where it was. Let's drop this back to 2. Okay, so yeah, if you leave it alone this way too, this is pretty good. Your trap is pretty doggone good. And this got me thinking, well, what if I do this on an FB 112? So if I take the Fat Bastard 112, which is all I cared about was the trap, and I put on a long put, can I make the FB 112 trap even fatter? Didn't quite work as well because of the shorter DTE, but we'll take a look at that as well. But yeah, you do have a put out here that is protective. Okay, so that is giving you protective. Your downside is maximized. If you blow through it, you can only lose so much money on this trade. So you do not have the unlimited downside you used to have. So you got a little protection there, and you can decide whether you want to leave these on, take them off. Now, this particular put, it's costing me $8.25. So it's costing me a decent amount. So I don't know that I would leave it on. If I close these naked puts, I don't want to leave this on, depending on how much is left, and still keep losing money afterwards. If I'm going to take off the nakeds, I'll probably leave this on, because if we've moved up way up here somewhere, okay, and the markets continue rocking, and I'm going to take these naked puts off, I might as well get rid of this thing too. Okay. No sense leaving that on. But if we're moving into the trap, then I can leave both of these things alone. It would be, we can think about it, and you can look at different areas to move. But I think leaving this on costs me money, and it will slow your theta a bit on the whole credit spread down here, but it's okay. Any reason it's not the new standard? No, not really. I mean, I think it's a really good trade. It makes it a pretty fat looking trade. Doesn't work everywhere though. So it doesn't work in every account. So, but once we start cooking on these things, you get some ideas on what you can do in here, and you can start moving things around all over the place. So let's take it. So this makes sense. So hopefully this is, if you're trading 3 contracts or more on MES, this is certainly an idea. If you're trading 4 or 5 contracts, you got to play around a little bit. So if I was trading 4 or 5 contracts, doing 2 of these would be a little bit more commission than I can afford. But I think once you hit the 3 contract mark, you would simply stop and start adding some other trades. You could potentially size up a bit. So you really got to look at how this works. And as Gary mentioned, you could add more trades or more quantity down here. Or like I said, you could also decrease the quantity. If 3 contracts in MES, you are doing, let's say 4 or 5, but doing 2 of these would be too much. Well, here's where you drop that long put to just 1 instead of 2. Okay, and now I'm still making 663 on 33.33. Okay, so this is now a 1121. The 1121 gives you the intermediate area where your buying power is a little more than it was, but not as much as if I had done 2 of these. Okay, so if, let's just say, my buying power was enough to do 1, but if I tried to do 2 of these, potentially, I just can't hit 3,300, although that's pretty much what the 111 or the 1121 comes out to. Maybe you can't handle just this much buying power yet. You can look to do a few different things. You could also drop, these puts down and muck around with it a little bit. You could also move these puts up a bit. Now, if you move the puts up, okay, you're going to reduce your tail profit. Tail profit is the goal. Okay. Trap to me is a bonus. Now, don't get enticed by the fact that, wow, man, look at the trap on that thing. That's great if your goal is somewhat of a hedge. If your goal is income here, I got to hit my income level to begin with. So this one's pretty decent. Okay, I tightened it up a bit. I think before this is where we were. So let's go back. I don't know where I was. Oh yeah, so I've tightened it up even more here. Now 118 bucks in the tail on 120 is only 9%. So this is, the more you move this up, the less you're making in the tail. However, you are now making a pretty good FB type of a trade or a pretty good hedge trade. Okay, so now I've turned this into a hedge trade at 120 days, which looks really juicy, but it's 120 days out. But again, for $1,000 buying power, you can get a decent, type of an FB trade at 121 days. Now, the max loss that I typically would take would be 1x what's in this trap. Because this trap is so much larger, I probably wouldn't keep that the way it is. So let's go back and look at exactly, I think, what we had before. I think this is where we were. I'll just remind myself that this was it. I think so. So this is the trade we had before. Okay. If I was doing, and let's remember this 33.50 put. Okay. If I was doing this trade normally, okay, my max loss in here is about $3,500 for me. Okay, that's probably a decent, that's 1%. I will go up to 2%. So when I'm putting on 1122 trades, I do twice the size. This would be a typical 1122 for me in a $320,000 trading account for here. All right. So this is what I'm looking for. This is how I would normally trade it. If I close in here, it's $7,100 loss, which is 1x the max trap profit. Okay, I would lose $7,000, but $7,000 on a $320,000 account is 2%. Okay, so it makes total sense for me to keep that at 2%. If you're going to move to the 1122 trade, okay, this is what that would look like now. All right. So I would have to increase my size. Because I also have to make, remember, I got to make $2,000 on each trade, okay? Because I have to be able to hit my income level for a $320,000 account. Okay, I got to be able to make that much money. So I have to make $4,000 a month on 112 trades. Okay, so if I look at my trade plan, it calls for X amount of income using long-term 112 trades, which for me is about $4,000. If I went to the 1122, okay, it would be cost me a little bit more in buying power than I'm using right now, okay, because I actually have to go up a pretty good amount of size to make the same amount of cash. To me, the P&L is the most important, not the percentage. Percentage is mildly important that I hit my 3% a month. That's the minimum, but I got to also hit my dollar amount per month as well. But if I put this particular trade on, yep, I'll make my $2,000 a month per trade. It is costing me more buying power. I'm going to delete this leg again. I'm going to take this back down to my normal size. Okay, here's my normal trade. Okay, I make $2,000. I use $10,000 in buying power. I got to make $2,000 a month on each 112 long-term 112. That's my minimum. I can't go below that. Okay, if I start closing these naked puts early for 50% or something, I got to make that money up somewhere. Okay, which is something I think you need to factor in depending on what you're trying to do. Yes, percentage-wise, it makes great sense. However, you're going to have to get more trades on, because if I'm taking them off at 50%, and let's say I take 2 or 3 off this month, I'm not going to have any income next month. Okay, because most likely I've taken off the December trades in November. I took them off early at 50% because the winning trades made sense to do that. Okay, but because I took off the naked puts early, I got to get more trades on, because I'm not going to hit. I'm going to have a gigantic November, which is fine, but I'm going to have a poor December. If you're trading for a living, it's great to have one big month, but you don't want to have a big month and then a 0 month and then a big month and then a 0 month, unless you're really good at budgeting your money and so forth. You can't go, a pretty big month and then maybe 2 months of nothing because you closed all your naked puts and now you got to wait. So if you take them off early, that's great, but you got to put something else on okay, to make sure that the monthly income is being hit. Yes, you are going to move some of that income forward, but I'm moving $1,000 forward instead of waiting for $2,000 next month. Did that make sense, what I just said? So if you close your naked puts at 50% today, I can make $1,000 instead of my 2,000, but that means next month in December, instead of my 2,000, I don't make any. So I moved $1,000 of it forward. I'm now going to be $1,000 short in December. I have to have something to replace that in December. Okay, so while it's great to move all that money forward and close your naked puts early and have a banner month, what happens next month when the trades you have on aren't enough to cover what you wanted? And while I moved 50% of it forward, I lost 50% of my trade by closing it. So you got to take a look at all of those things in conjunction. But let's go back to this trade here. All right, I'm going to make $2,100 on $10,000. If I convert this, okay, to the 1122, all right, it's all good. I got a 1122 trade on, but I got to get back to my $2,000 a month that I'm making. Okay, so it takes me to here. Okay, it is costing me more buying power to do this. All right, so I am spending now more. So moving from ES to ES, MES to ES was one thing. Now trying to do this in your account to hit your numbers, it's a little bit more challenging. So now I have to start moving things around in here to try to make up. So my buying power now is 13,000 versus 10 to make the same amount of money. So this is why this is not necessarily, to me, the standard trade. It is, depending on your buying power and what you're able to do in your account. So now my trap might be too big. I could actually shrink my trap a bit. Okay, let's see if we can do that. Stupid. Okay, we can't, because we can't get any tighter than that. So we can't, right now we don't have the 25 wide strikes, so we cannot move the trap at all. How else can I reduce the size of this trap? I could potentially start to move this farther away. Okay, but when I do that, okay, I'm giving up my income. So I got to get back to my income of $2,000. I'm just moving stuff around, but I got to spend less than 10. This is not saving me any money to make it a 1122 trade. We can start to drop this thing down. Okay, the farther we drop that, the more money I'm starting to make now. We can peel off a couple trades. All right. We're getting closer. Let's get it down to here. All right. So now I'm pretty close. I'm back to my, I have to do a pretty wide 2 long puts down here in order to keep my initial money the same. However, my trap is still gigantic. Okay, so I'm using the same buying power I was before, but now my trap is huge. So before it was, I think, 50 wide is 5,000 plus your 2,000, so $7,000 is your trap. Okay, right? 50 plus the $2,000 in the tail is your trap size. So from a stop loss standpoint, I would still probably close this at a 2% of net lick. All right, so Tom, I think you posted that. I keep my net loss on this trade at 2% of net lick. You just got to know what that is. And if this thing got in trouble, that's where I'd close. I would not close it at 1x the trap anymore. Okay, otherwise this is a gigantic loss. But I'm now making 12 grand in the trap using the same buying power and getting almost the same setup that I have here. I mean, you can always fuss around a little bit and make some things move, but by moving that put up, it jacked my BP. So I got to be careful about moving things around too much. Might have to even move down even further. Okay. So this is still over my 11 grand, but it's okay. I'm making 2,200 on 11 grand. Okay, that's 20%. That's perfect. All right, so This would be a good setup. And instead of $7,000 trap, it's a $12,000 trap. So would you make this your trade? Yeah, but you've got to make sure that your put debit spread down here is probably doggone wide, at least probably 1/3 of the cost of the credit that you get for these puts. So instead of 14, 15 bucks on this put, I'm going to have to spend $5 here to get it there, but you still did get it there. Okay, and now you got a big trap. Okay, so like big traps, you cannot lie. I think it's a great opportunity here to do it. But if you're going to make this your go-to now instead of the 112, okay, I think you've got to go wide, and then you're going to get a big trap, and you got to be able to manage that thing slightly different. But I do like this trade. I mean, I think it looks like a good trade. My buying power is pretty much the same. My tail is pretty much the same, but my trap is over $5,000 more. So if you start hitting a couple traps on these, they're really going to pay off pretty doggone well. This makes sense? Everybody good on that? Made sense? Let's get back into our table here. Any questions? You can type them in chat if you need to. I think I got anything on. But if you're using MES and you're trading small and you're trading at least 3 contracts a trade, I think you should go up to ES, and I think you should do the long-term 1122 trade. I think it helps you, but you got to make sure. Does it take longer to profit with the extra cost in there? It's probably going to slow down the theta, the decay overall. We're going to go to an IRA in a minute. It's going to slow down that decay fractionally. I haven't really tried them long enough to see how much it slows it down, but do you really care? Because if you're closing at 95% and you were going to expiration and you were going into the last couple of weeks, is a week or so a big deal? It may only take an extra week or so for that thing to decay. So, and you're talking 90 days. I don't know that it's going to make a huge difference, but let's look at this trade in an IRA. We're going to go back. I'm going to put on the same trade, but I'm going to do this in an IRA. Okay, boom. So there's our trade, but now I want to rock and roll this thing into an IRA. So here's the same trade, okay, in an IRA. Let's look at how this thing looks. Okay. In an IRA, I also would be doing this size. All right, so in an IRA, it's costing me twice as much. So let's see what happens in an IRA. And I've got what about 10 minutes or so here. So this is the same trade in an IRA. So this would be my trade in an actual IRA right now. Now this thing takes $20,000. Okay. All right, so we're making $21.30 and we're using $20,000 to do that. Okay, which is not bad. So you're making, $2,130 in the tail, and I'm using, okay, 19,641. Okay, that's 11%. Okay, and 11% divided by 4 months is 2.7. My goal in an IRA is only 1.5. So I'm perfectly fine in a $200,000 or so IRA doing this, and obviously with a smaller IRA you can do smaller size. And if we look at just a smaller size, again, I'm making $1,000 on 10 grand. I'm making 10% or so, or 1,060 on 9820. I'm making a little bit over 10,000 or 10%, 10.8% in 4 months, which is 2.6% a month. Who's unhappy with 2.6% in their IRA? My goal is only 1.5, as I said before. All right, so now what do we do here? Let's do the same thing in the IRA, and we're going to pop. Let's pop down here and add 2 of these puppies, and let's take a look at what this looks like in an IRA. Okay, so the IRA right now we're making It's not actually not bad. So 305 bucks on 3690. Okay, I'm making 8%. Still not bad. Again, I guess that's still 2%, so it's not terrible. So I guess in an IRA would be totally fine to do it here. I still have to make, though, X amount of money. So percentage is one thing, making the money is another. So if you look at the fact that I still have to make 1,100 bucks in my IRA, because remember, I still have to hit my monthly minimum. Okay, before I was making $1,100 in my IRA. Let me see if I've got the. I think I captured the screen cap on that thing. Okay, in an IRA, I was making $1,300 on roughly 10,000 or so. Well, to me, I still have to make 1,300 bucks. Okay, so I've got to do 5 contracts now, okay, to make that same money that I was only using 1 contract before. I got to go 10 contracts, which is more commission. Okay, so I can't get commission on here. Okay, but look at my buying power now. My buying power is significantly higher. Okay, significantly higher. This buying power is 80% higher to make the same P&L. Okay, which is why in an IRA, to me, it doesn't make as much sense. The percentage gain is fine when you put this put on down here, okay? But I got to make the money, okay? And if I only allocate, $10,000, to this particular trade, I can only do like 3 contracts, okay? And now I'm making on 1,100 bucks, I'm only making $900 bucks. It's not the same. Okay, I was making over $1,100 on $9,000 in an IRA, okay, or more, at least $1,300 on 10 grand. Now I'm only making 900. I am making less money. However, I'm still making good money. Okay, right? But in order for me to hit my, my profit, I'm usually doing around in an IRA. Let me pull it up quickly. Okay, my IRA is typically going to be using around $20,000 to make $2,000. Okay, so I'm not quite making the same amount of money. Maybe I do one more contract. Okay, yeah, I think 6 is probably it. That's a little. This is pretty close. Okay, on the same buying power that I would use to do 2 contracts in my IRA of the 112, I'm now having to use 6 contracts, okay, to make 1,800 versus 2,000 and some dollars. Okay, so I am making less money. I'm not making bad money, but the one thing that you do notice here is look at the size of this trap. Okay, so here's the the money is okay. Okay, so we'll give that here is 1,800 bucks using $22,000, okay, and almost 17K in the trap, okay. So this is the long-term 1122 in an IRA. Okay, now I want you to remember these numbers because this is I got to make roughly $2 grand per on these to survive in the IRA. I'm going to go back. Okay, and I'm going to take this thing down to my normal size. Okay, so this is my normal size in an IRA. Okay, you can see I'm still at roughly $20,000, but I'm making, $2,130, but my trap is only $7,000. Okay, roughly the same money. Okay, 1,800 was what we were making before on 22,000. Okay, which is 8.2%, which is over 2% a month. It's still not bad. And in my normal one that I would be doing here would be making $2,130, okay, on roughly, we'll call it $20,000. Okay, this is making 10.7%. So I'm making more. I'm going to make about $300 more on the same buying power. not a huge deal, but every little penny counts. But instead of 8.2, I make 10.7 now. So why would I do that? Well, you could do it for the trap money, because the trap money, if you remember, on the long-term 1122, that was on this same IRA using about the same buying power. That trap was $17,000 in size versus 7. I mean, that's a $10,000 gain. If in a bearish market or a neutral sideways to down market, I think it's maybe worth it to put these on, because in a down market, not a plunging market, but in a down market like last year, had I been doing these, I'd have probably, instead of 80% return on my money, I guarantee we would have been well over 100 to 120% return on our cash or more last year had I done these, because the trap would have been so much bigger. So the long-term 112 gives you the fattest trap possible, and it may give you a little bit less of a return, but it's not terrible. So I think it's a good opportunity to do that. Okay. And you never know. So the trap is always going, that's the opportunity of getting in the trap is always going to be the same. Okay, because you're selling around 24 delta. So I always have roughly an 80% chance that we are never going in the trap, only a 20% trap of getting into the trap, on expiration. And rarely in an up market, we don't even get that for the most part. But in the down market, we certainly have a better chance of hitting 20 or 30% of the trap there. All right. So do some math. If your trap is bigger and your same percentages hold, if you're able to give up a little bit of income on the upside, which is not a lot, and if you're willing to do that, you can really increase the size of the trap. All right, I think we're about done on the session today. I hope this made sense. I'd like to go through the FB 1122. We'll do that on another session. Didn't quite work as well, but sometimes things work better when I'm trying to bounce ideas off. If I'm doing a FB 112 trade, I'm just going to use this as a rough gauge. That was pretty damn good. All right, so here's an FB 112 trade. I go out about 60 days on these. This one I find it gets really hard because I don't have the income up here to play with in the trap. So here's a standard FB 112 trade. Fat bastard is a big fat trap. Okay, very skinny tail, nothing here. Okay, big fat trap. All right, and this is a $5,000 trap right now. If we tried to put on, I got just a minute or so. Let's see what we could do here. I don't really know. Okay. All right, here's the FB with the puts on it. Now you can see I'm now paying a lot more for this trade because I didn't have any money to work with now, and I'm having to pay for a put. I got to reduce the amount of the cost of that put substantially, okay, to get even close to making a small credit here for this particular trade. It's not really working too well so far. I got to play around a bit. I don't really want to. I mean, I'm shortening my trap. I'm farther away from the money. I don't really like doing that either. So here's this trade, but it's not the same amount. Okay, so it didn't work quite the same when you're only doing like 65 DTE and you're not getting the credit. On the long-term 112 trade, okay, I think it makes 100 perfect sense. Okay, when you're trying to do these shorter trades or a standard 112 at 60 days, let's do a standard 112 trade. Boom, boom. Okay, standard 112. All right, so here's your normal 112. So if I was just putting on a 60-day 112 trade, this is what it would look like. Now I'm still in an IRA too, by the way. So let's get back to trading. Okay. So let's get back to the trading account here and take a look. All right, so standard 112, I make 625 bucks. I'm using $4,511 in BP. I'm making 14% in 65 days. That's 7% a month. Pretty doggone good. This is why I keep putting on 112s in on top of the long-term 112s. They fill gaps in income for me. They're good trade returns. I would rather be doing something like this than potentially some strangles or naked puts or something like that, even though I do all of them. These are really good trades. But, so there's my buying power on this. All right, I'm going to take one more note here so I remember this one. Okay, so this one was 625, 31.13 in the trap using $4,500 in buying power. Standard 112, 60 days out. Okay, standard setup, 50 wide. Okay, 5 delta. This is what you're getting. Nice trade. Okay, nothing wrong with this trade. Put these on all day long. Okay, and you can do these in everything under the sun, from CL to other futures trades. They all work nicely. But let's say we want to do the same type of thing here, and let's, I don't know, I'm going to guess. All right, so because we put this on down here, okay, I'm not getting any money for the trade, but my buying power is now a credit, which is funky in here because I have other trades going. I'd have to size up significantly in the size to get it to where we were. I don't think this buying power is right because I think there's other trades mucking with it right now. But to get something that was similar, about 600 bucks, okay, your trap now is monstrously larger. Let's see if we can just pick a different expiration. Okay, yeah, this makes a little bit more sense. Okay, I think there was just something in the expiration with other trades that was giving me a credit on the buying power. Okay, so this would be a standard 112 trade at 60 days. I had to go out to 77 to make this, to get a better sense of what we were doing. 455 on 5,200, which is less than 625 on 4,500 previously. I could potentially move this down a bit. Still expensive, but I'm pretty close. Let's go 3,600. All right, so this one's a pretty good setup. Now my buying power here, because again, the shorter duration, like the 60 days, they don't work as well as the 120. You can see my buying power by adding that, okay? Because I had to add, in order to make the same amount of money, I had to increase my quantity, which is powering my buying power more than the 4,500 previously. I'm still making decent money. I mean, 630 bucks on 6,200 and some dollars, okay, is a 1% return, or I'm sorry, a 10% return. 10% in 60 days or so is 4 or 5% over 60 or 77 days. That's not bad, but my trap is certainly larger. Okay, so I might be using a little bit more BP, but you're buying a bigger trap. So I think if you want the larger trap on shorter term 112 trades, you want the larger trap. I think the 1122 is your bet. I think if you're in MES and you want to get to ES, I think the 1122 is your best bet. If you want to replace your current and you're doing ES, I think that's really a judgment call for you to see if it's actually worth it. In an IRA, we made a little bit less money. In a standard account, I think we make a little bit less money because you still have to hit the amount of money you need to make off the trade, which means you have to add more contracts, which adds more commissions and adds more buying power. So it drops your buying power initially, but it also drops the money you make in the tail when you add these puts. Okay. If you move those puts too far down, your buying power gets a little bit wackier. So now you just have to start monkeying around with the trade. It's not the same trade anymore. It doesn't work as well. Things don't set up quite as nicely. One thing you can do, though, is when you get down to these strikes that are shorter term, like 60-day, this is where I think it makes more sense, is you can't do 50 wide because it doesn't work as well. But if you go 25 wide, you still get a pretty big trap. I mucked around with, I think, a bunch of things here, but you still get a pretty good sized trap at 25 wide because you added these puts down here. It does bulk up your trap a bit. Okay, this is the same setup that I just did on a standard 112 trade. I'm making 663 versus 625. I'm using 4302 versus 4500. So here's where I'm actually using less BP. In order to do that, though, I had to shrink it from 50 to 25. Now my trap's not a big giant trap anymore. It's a lot smaller trap than I had previously. But if income is your goal and not the trap, this could work. I probably confused the heck out of you, but I think you really got to play with it yourself and figure out if this is right for you. And it really depends on the trades. If it's the long-term 112, it works pretty doggone well to add the long puts. And it certainly makes sense if you have buying power issues. Okay. If you're doing the shorter term FB trades, BA trades, or the standard 112 trades, all around 60 days, I think it's much more difficult. It makes a smaller trap for you, and it increases your buying power because you got to increase the quantity to make the kind of money that maybe you want to make. All right, that's it today. I got to rock and roll, and I got to rest my voice up for a ton of interviews coming up. All right, I will record this thing, folks. We'll put this in the strategy sessions today, and I hope it was helpful. But I hope it gives you some stuff to work on. Now I want you to go play and see what you can come up with on your own, and see what makes sense for you. But I think for small accounts, I think it's a beautiful thing that migrates you from MES to ES quickly. Okay, as you start to scale up, I think once you hit like $15,000 to $20,000 or more accounts, I think it starts to make sense. But I think you have to be at least around $20,000 or so to be able to move from MES to ES doing this. All right, everybody, take care. Enjoy a great rest of your day. We'll see you in Discord. Take care, everybody.